Hey everyone, this is Rob Keens with goldsilverpros.com. It is Thursday, May 6, 2021. We are firmly into the month of May, and I'm going to talk about what has happened to silver in Silver Squeeze 2.0. We're going to talk about physical demand, and we're also going to talk about some new laws that may be freeing up gold and silver to be money all over again here in these United States of America. So proud to be talking about that. So I'm going to go straight to the screen share, guys, and we're going to jump right into it. Before we get into the detail, I wanted to point out that our sponsor for the program is Kootenay Silver. That is a company we have followed since 2018, and I wanted to highlight some of the recent news that they've had since the last time we covered them. There's two news releases we want to talk about. The first one is they have provided an update on the ongoing drill program at Copalito, which is one of their 4 major projects down there in Mexico. Mexico, of course, is one of the premier silver mining districts in the world, and Kootenay Silver has 4, count them, 4 projects that they're developing in the Mexican district. They have announced some highlights from their drilling program, which they started not too long ago, and including some really interesting finds. They had 2843.1 silver equivalent grams per ton in one drill result, and 1,322 grams per ton equivalent, which is basically gold and silver and a little bit of base metal, over 3.2 meters. They had another vein here, the Pilar vein, in which they had 110.6 grams per ton silver equivalent, 40 grams per ton silver, and 0.482 grams per ton gold, and 1.2% lead and zinc over 7 meters. And another one here within that, 394 grams per ton silver equivalent, which included 51 grams per ton silver, 2.28 grams per ton gold, which is really interesting. That's very good, and in and of itself would make a very profitable mine at those levels. And a full 6.18% lead and zinc over 1.2 meters. Now, the lead and zinc will probably be used as offsets to offset the cost of the mining of the gold and silver, but essentially it's all money, right? When you pull this out of the ground, the more metals that you have, base metals and precious metals, you separate those out eventually as you go through the milling process, and you get paid for all of those different metals. A lot of times they'll write off, or not write off, but they'll use the lead and the zinc to reduce the overall all-in sustaining cost of getting the silver and gold out of the ground. They have another drill hole 20033 on the Pilar vein, in which they talk about 215.27 grams per ton equivalent, which is 101 grams per ton silver, 0.7 grams per ton gold, 2.28% lead and zinc. And another vein down here, 1,813 grams per ton silver equivalent. Of that, the breakout is 16.95 grams per ton gold, 369 grams per ton silver, and 3.74% lead plus zinc. Those are astounding numbers, 16.95 grams per ton gold and 369 grams per ton silver. Each and of themselves would be very profitable mines. It's together in the same drill hole, plus you got lead zinc, and they have some results here. So Copalito is one of the company's relatively new projects that they've had since 2018, in which they're developing this year. The other one is Columba. Of course, they also have La Negra and Promontorio that they've had dating back several additional years as well. Now, I wanted to go over another news announcement, which is really good. As they continue to drill, they continue to get these really good results. And they're announcing several high-grade intercepts in the Hanging Valley Wall at the Columba project. This is their other really promising high-grade project there in Mexico. So they've got 503 grams per ton silver over 1.2 meters and 889 grams per ton silver over 0.55 meters. Hole CDH-21-90 has 2.4 meters of 245 grams per ton silver and 365 grams per ton silver. There are a lot more results here in some of these other holes, and they have a nice little table for you. They'll give you the width of the vein, they'll give you the silver content, they'll give you the lead and the zinc as well, and they'll tell you exactly where it is. So this is a really good table for you, for those of you following Columba and the previous news release, those of you following Copalito. Those are the 2 new promising high-grade projects that Kootenay has in Mexico. A lot of people don't know about these high-grade projects. While Kootenay's been drilling out and exploring La Negra Promontorio for a long time, La Cigarra, Columba and Copalito are these high-grade silver projects, which also have a nice mix of gold, lead, and zinc. So you guys are interested, you can find Kootenay on the Toronto Stock Exchange Venture under KTN, or in the OTC here in the United States under KOOYF. And they are an up-and-coming promising silver producer. All right, on to the program. I promised you guys we would talk about demand for silver. once we essentially got past silver squeeze 2 or got into silver squeeze 2, which essentially started at the last part of April, but really we feel picked up in the first part of May. Because if you remember back from my May Day video last week, we talked about the 10-year anniversary, on May 1st, which would have been Saturday, of the May massacre in silver from 2011, when the price was hammered down in the futures market by short paper derivative trading by the bullion banks. And the price went from 50 to 34. It rose again to the $44, $45 range, only to be slammed down again in August and September. So the bullion banks would not let it rise to past its previous all-time high. So in commemoration and celebration of that, a lot of people have pledged to buy physical silver, mostly because they just want to store their money in something valuable. So we're here on the United States Mint website, and I wanted to talk about the American Eagle, the Silver Eagle, because that is in many ways a proxy for American demand in the silver, because it's the most popular singular minted coin that people are going to buy. Of course, you have regular coins and bars as well, but we can see the number of silver ounces sold from January to April. We had 4.7 million sold in January, 3.19 million in February. In March, it picked back up to 4.087, and April so far, 1,053,000. So silver strong, silver demand is still strong in that market. Now we want to look over here at another little news tidbit we got from Austria, and this is Austrian paper, so I've translated. You can see I've translated this at Google, but here's the URL if you want to access it directly in its native language. But they were talking about high demand for the Philharmonic and a bottleneck. And it says here, obviously precious metals are in demand like never before. The Austrian Mint hardly keeps up with the production of the Vienna Philharmonic in gold, silver, and platinum, and operates double shifts. Silver in particular is currently swept from the market and practically sold out. There are pre-orders for every ounce that is produced. So in other words, there's so much demand across the world, not just in the US, for silver and for gold as well. So the Philly and gold remains the figurehead of coins from Austria. It's one of the best-selling coins in the world, the Philharmonic. I love it. I think it's an absolutely gorgeous coin. I love to have those. I like the maple leaves and the American Eagles. I also like the Krugerrands. But here's a nice little quote on silver specifically. There is now so much demand for silver internationally that we cannot produce as much as the market would like. We have orders for the next few weeks, and every ounce that we produce has been sold, said Gerhard Starsic, General Director of the Austrian Mint. This year, 3.2 million ounces of silver fills have already been sold. So if we look at some of the government minted coins, not only in the US, but now in Austria, we're seeing that they have excess demand, so people are still buying. Here's a nice little chart that originally popped up on Wall Street Silver. I've got a version of it from Twitter that I wanted to talk to you about. It's really interesting that the overall COMEX registered inventories of silver are falling while the investment in PSLV is rising. So people are definitely taking silver off the market. Of course, we've seen over 40 million ounces taken out of silver in the last month and a half off of the COMEX, where it's actually pulled off of the exchange, not put into storage, but actually pulled completely off. And the demand in PSLV has been so strong that you can see that the PSLV demand is exceeding what has been pulled off of COMEX. This is a really neat chart. Thank you to Wall Street Silver for putting that up there. And we're going to go farther in terms of silver. I'm at Gold Charts R Us, Nick Laird's site, and we're looking specifically at that Sprott PSLV silver ETF ounces. He's tracked this over time, and you can see this vertical line since 2020 in investment in PSLV. So if anybody asks you, are people buying the PSLV? They've been buying it since before the first silver squeeze. They've been buying it for over a year. You can see that the millions of ounces, it was 1 million ounces back here about the second month or third month of 2020, the February-March timeframe. We're now almost at 4,000 million ounces, 4,000 millions of dollars worth, millions of dollars worth of investment into the PSLV, and those overall ounces has risen to 140,808 silver ounces held by the PSLV. So super strong demand. And you can see that people are ditching the SLV, the iShares, that derivative product for the PSLV, which I've always said is probably a better option just by reading the prospectus. Just by reading the prospectus, I think the PSLV is probably a safer bet. You know, you guys should look into that and do your own due diligence. Please don't take this as financial advice. But in my reading of it, I feel more comfortable with the PSLV over the SLV, as well as most people should. Now, I'm going to go to COMEX. So we're now talking more silver, month-to-date COMEX delivery notices. This is as of 5/05/2021, which is yesterday's data. And we look at the silver futures. Remember, here that I said the first delivery day for May, which actually occurred at the end of April, 5,123 contracts of 5,000 ounce silver were redeemed on the very first delivery day for the May contract. That was over 25 million ounces. Well, now we're up to, so far, 5 or 6 trading days into the month, at 6,231 contracts of 5,000 ounce silver. I'm going to add that real quick just so we can get the number. So 6,231 times 5,000 ounces in each contract is 31,155,000 ounces of silver. 31,155,000 ounces of silver were delivered on COMEX in the first 5 days of May, which isn't even the biggest open contract in terms of open interest. That's July. So that's an amazing amount considering most of the open interest had rolled from May to July, but we still got a lot of deliveries in the first basically 4 or 5 days of May. Now, I do think that the deliveries are going to slow down a little bit on COMEX because the open interest is not super high right now. But we could, it's possible we get to 40 million ounces. I mean, that's entirely possible. We'll have to see what happens on the COMEX as we roll forward here. Now, I wanted to go over to this awesome chart over here at Nick Laird's site because we're going to talk about silver depositories across a bunch of funds. Okay, so we talked about retail demand in terms of coins and bars. We've talked about demand in terms of PSLV and SLV, which are in this chart. We've talked about COMEX demand. Now we want to do a longer term view, and we can see that overall across the COMEX, across iShares, Sprott, and all these other ETF and different funds and depositories, that in the last 4 weeks, it appears to me that over 6 million ounces has been pulled out. So the trend has been for people to get into actual physical 6 million ounces worth in the last 4 weeks. That's an astounding amount. 7.6 million ounces has been pulled total off of the iShares SLV. So people aren't really buying in the SLV anymore. I think they've gotten smart. They want to be able to get access to physical ounces or better funds that allow more accurate access to the silver price, such as the PSLV than the SLV has. Out of COMEX total, we've seen 8 million ounces in the last 4 weeks. And we've seen overall, since the trend started, since Silver Squeeze 1, about 40 million ounces come out of the COMEX in terms of silver. So that is an absolute ton. Sprott has added 6.7 in the PSLV. We've also seen in the Z-SIL, 1.83 million ounces, 1 million ounces going into the Deutsche Bank Fund, 233 ounces go into Source, SSLV-LN, and some others as well. So a lot of people are storing physical silver in what they consider safer places, but net, they're pulling them out net off of all the markets, the exchanges, and the ETFs. Now, this could be a lot of industrial need for silver because remember, the Silver Institute published a report in November that we probably would get over 1 billion ounces of silver demand for the year in 2021. So those additional ounces have to come from somewhere. I think that industrial demand is draining the COMEX and all the various places. But I think you add to that the additional investment demand for the silver squeeze movement, people wanting to have access to physical silver, and that's what's going on. And that is your silver report. Overall, at the end of the day, I think the silver squeeze movements have been successful in getting physical silver to people who want to save in them, and also pulling the physical silver off and getting people out of derivatives that aren't going to be effective for them and actually having access to physical silver for the purposes of getting those protective characteristics of owning physical silver. And that is the most positive change. Now, we haven't seen the price pop, but at the end of the day, the price is very ephemeral. It's determined by the futures market. We can't really control that right now. I do think in the long run, it's going to change. I've said that 100 times, 1,000 times even. But the main thing is getting people access to physical. If you want silver and that's your choice, we want to put you in the physical, not in the derivatives, because that's where you're going to get your lack of counterparty risk and your security. All right. Now, I wanted to review right now a company that we covered a while back, Newfound Gold. We covered them back in February. So this article entitled Canadian Queensway Gold Deposit May Rival One of Australia's Best. And we did a video on them back in February, and they've done very, very well. So if you guys have not watched that, it already has 4.1K views. Please go and watch that. We talk about Newfound Gold. It is a junior miner in the space. And since February, they've gone, since February 2nd, let's see, they were trading at $2.62 when we released our video. As of right now, they're sitting at $6.57. Ooh, look at that update. $6.57. So it's risen quite a bit in that time frame, and you can see it on the chart. We talked about them here. They've had great news on what's going on with them. And so this is one of our successful research pieces where we found a company that was on the way up. It happened that we got them right before they started releasing some great news. They started releasing news. The market has taken notice, and now they're trading 657 USD. This is a major, and I mean a major success story in terms of the share price and the market cap for this stock. Now, we'll have to see if they can keep it up. But again, it looks like we found some success and maybe hit a nice little triple here, rounding the basis maybe to a home run on Newfound Gold. So those of you watching our channel, we do profile lots of stocks. This is a very successful one. That's Newfound Gold. On the OTC markets is NFGFF, and you can trade them on the Canadian Stock Exchange as well. So congratulations to us for doing that. And I've had a lot of people write in on this one saying, Robert, you smashed it out of the park. And that happens sometimes. I mean, we don't always hit them at the right time to get you that kind of share growth, although most of the ones that we look at do pretty well because we do our research. But this one was really just a home run. So I wanted to cover that. All right. So now we've gotten into the silver piece. I want to take a couple of minutes to talk about gold. And I'm not going to go through all of the information that I originally wanted to for this video, because I think there's so much information coming out in the precious metal market. I'm going to do another video. So stay tuned to the channel for yet another video coming up in the next day or two, where we get deeper into a lot of this stuff that's going on in the precious metals markets. But there's so much news, and this is probably the most important piece we're going to talk about. The state of Arkansas has ended sales tax on gold and silver. This is a report here at zerohedge.com. And it says, by signing sound money legislation today, Arkansas's Governor Asa Hutchinson has officially ended sales taxation on gold, silver, platinum, and palladium bullion and coins, thereby setting an example to legislators in New Jersey, Maine, Ohio, and Tennessee, who are still considering similar measures in their own states this year. We're now starting to see states take control of what is constitutional money. Article 10 of the Constitution talking about nothing other than gold and silver should be made legal tender. So here's the bill 336, backed by the Sound Money Defense League. And the biggest part of that, they have 4 reasons why they want to do that. The one that I'm most interested in is taxing precious metals is harmful to citizens attempting to protect their assets. Purchasers of precious metals aren't fat cat investors. Most who buy precious metals do so in small increments as a way of saving money. This is what I've said over and over again. It's not a collusive effort to rig the market. It's small investors investing in a little bit of precious metals to protect themselves. So they're purchasing them as a way to preserve their wealth. Now, there are other reasons why the state of Arkansas did this. Taxing precious metals unfair to certain savers. Levying sales taxes on precious metals is logical because gold and silver are held for resale. It's not a final product, like something you're going to eat or consume. And taxing gold and silver harms in-state businesses. So those were the 4 reasons. But this last one is the constitutional one. People are protecting their wealth by going into real money, natural money, constitutional money, that's gold and silver. And congratulations to Arkansas for this. I posted this on Twitter, I believe yesterday, and it's blown up with several hundred likes and a bunch of reposts because this is so important. If we want sound money, this is so, so important. I'm going to talk about this article next time. Wall Street on parade, a trader's federal lawsuit against JP Morgan Chase. I'm not going to cover that this time because it's too juicy. I want to spend nearly an entire episode talking about that. But we had so much great precious metal news today, guys. I wanted to share this with you. I think it's so important, all the things that are happening. One, we see the changeover from people buying derivatives in silver and getting into physical, which is the only way really to protect your wealth, and to invest in sound money as per the Constitution, as per, we believe, nature's money. Natural money that stood the test of time over 6,000 years. We talked about some important developments in gold and silver. We talked about one of the mining stocks, Newfound Gold, that's done really well for us. And we're so happy for investors that are emailing us with that success. And we talked about some important developments at Kootenay Silver, probably my favorite silver explorer right now that I'm following in that Mexican district, because they're having such great results at both Columba and Copalito. And I think this is going to change the fortunes of that company, because their La Negra and La Cigarra projects are nice, volume silver projects, but Copalito and Columba are going to change the game for them, because they're going to be high content silver, low cost mines. They're going to be very easily for Kootenay to capitalize on, for investors to make money on. So big developments at Kootenay Silver there. Happy for Jim McDonald and that whole team, whom I know very well. Had a relationship with them for 3 years, and good to see that happening for them And we're going to have more for you guys later this week. Don't worry, we've got so much news that we want to talk about. Stay tuned to Twitter channel, goldsilver_pros. Stay tuned to this YouTube channel. Please sign up for free on the website. Go to goldsilverpros.com and click on that newsletter link. Let's just go show you guys how to do that right now, because we want you guys to know how to get notifications when we send out content like this and other important information that may not go into YouTube or social media. All you do is go to goldsilverpros.com. You click on this newsletter link up here. You put in your email address, click I agree and subscribe, and you're in. These are the free newsletters, the non-charge ones. Of course, those of you who want access to Gold Silver Pros University, which is a university level course that I have developed to teach you the financial markets and trading in gold and silver and how to avoid risk in the overall markets. You can subscribe here, become a subscriber. We have 2 plans available for you, the semi-annual, annual, and you also get the Golden Quarterly newsletter, which we talk about the economy. We talk about all of our predictions. We talk about the gold mining stocks, the silver mining stocks, and the overall industry, and much, much more. We definitely want you guys to sign up for that. It's a professional newsletter for you guys. One thing I want to point out, if you go down and click on the research section of my website down here on the bottom, click on research in the footer period here, and you come down to this area, you'll see all of my forecasts. So I have links to where I made a bunch of forecasts. These are the confirmed ones. If you click here, it's the ones pending that we think are going to happen and we see starting to happen. But these confirmed ones, so far I have 32 confirmed ones, and I link you to where we first made that so that you can see where we made that prediction. You can confirm when we made it, dating all the way back to 2010 when I wrote the book, all the way going up through 2019, 2020. And the ones still forecast and progress are pending are some of the longer term ones, the longer cultural or financial ones that we're still waiting to come true, but they're documented here. So when they do, we'll move them over to confirmed. The power of that, guys, is that we do so much market research and we build so much value into that and put that in our quarterly newsletter. That's where you're going to get our new predictions. I spend a whole heck of a lot of time researching this. I spend probably at least $100 a month doing research, and I slave every quarter, probably for 3 days, writing that newsletter to the point I'm so exhausted and spent and done that I basically lie in bed for the day after. But we do that because we want to provide you the best market research. We comb the internet for information. We pulled down data sets. I crunch data sets. I talk to tens upon tens of industry professionals every month. I have so many connections within the precious metal space. You know, we visit mines. We do all of that stuff. Exhaustive research to bring you true value on that quarterly newsletter. And again, if you're new, or even if you're a veteran and you're getting into this space, that university is designed to be a university graduate level course, because I have a graduate degree and I wrote it as a graduate level course, but in a way that everybody could understand, even if you're new, to provide you the education that you will never receive in schools, whether it be your K through 12 or your college. They're not going to teach you this financial education. I teach you it right here, and you get it for the low cost of that semi-annual or annual subscription. If you are going to sign up somewhere else to get that level of education, it would cost you tens upon tens of thousands of dollars, and we have it for a much lower cost for you. All right, that'll be it for the commercials for the program. Thank you guys so much. Please click like and subscribe below. We need you guys to do that because we want you to get the updates when we publish this content, and we want you to go to the website and sign up for that free newsletter. That way you're aware of all our specials and deals and when things come out and when we do programs like this. Thank you guys so much. You're the reason why we're here. We cannot do it without our pros. You are the pros. We're not the pros. You're the pros on the channel. We appreciate you tuning in and participating. Thank you so much. Until next time, when I talk about the shenanigans going on at JP Morgan and have a lot of fun with that, this is Rob Keens with Gold Silver Pros.